Right. So, welcome to the Decode Speaker Series. My name is Harriet, and I will be your MC for tonight. Thank you for joining us, and I hope you have a wonderful and insightful time. So, this event is brought to you by Decode as part of our bi weekly speaker series. For those of you who aren't familiar with us yet, Decode is a global community of ambitious creators and passionate builders. We are a nonprofit with roots in the tech and entrepreneurship community in Silicon Valley, and we teach entrepreneurship classes at Berkeley every semester. Over the past 5 years, our annual Decode Innovation Conference has been the largest tech and innovation conference co-hosted by Berkeley and Stanford students and alumni. We have had over 10,000 audiences every year who come from all around the world to hear from our top-tier speakers. Some of our notable speakers include Eric Yuan, founder and CEO of Zoom, Steve Jurvetson, board member of Tesla and SpaceX, Michael Seibel, COO of Y Combinator, and Astro Teller, CEO of Google X, among many others. Our recent conference back in October had garnered 1.3 million views across 44 countries and have thus prompted us to kick off this speaker series, with today being our second session. Our next session will be on the 10th of February with Jamie McGurk, managing partner of private investments at Decode, an investment management firm with $20 billion of AUM across private and public investments. Previously, Jamie was an operating partner at Andersen Horowitz, where he led the corporate development operating team. Stay tuned for more information on the event, and we hope to see you there. Also, if you would like to volunteer with Decode for future events, please do send an email to careers@decode.build, and I repeat, careers@decode.build. So now let's go through some logistics for today's event. After the fire chat, there will be a Q&A session, and you can send in any questions that you have for a speaker via the Zoom chat. We will go through as many questions as possible, but note that we might not be able to cover all of them due to time constraints. For those of you who were selected to join our roundtable session with Karin Kimbrough, you should have received an email from us confirming your spot, and we will be inviting you to join a separate breakout room directly from the Zoom meeting after the Q&A session ends. So please do stay around to receive the invitation. So I guess we will be waiting just a bit for Karin to finish her interview at the backstage, and we will give her some time for her to be ready to join us. Great. So while we're waiting, I guess we can have some time for ourselves. And I guess, how did you guys hear from us? You guys can send in your answers in the chat. Anyone who would like to share? Great, okay. So I guess mainly from social media and LinkedIn. Well, yes, Karen's from LinkedIn too, so great. I guess while we're waiting, do you guys have any speaker suggestions or like people you would like to hear from for our future speaker series events? Nice. Okay. Shuo, yes. Shuo will be our moderator for today, actually. Yep. We might be able to get her to speak sometime later too. Great. Okay. Do you guys have any topics you're interested in or anything specific you'd like to see from us in the future? Feel free to give any suggestions. Nice. Okay. Great. Okay. I see Karen's on her last question now, so we will just be waiting a little bit before she can join us. Great. Great. Okay. So I see that you guys have finished the interview and are joining us now. So for today's session, we've invited Karin Kimbrough, Chief Economist at LinkedIn. Before Karin joined LinkedIn, she was at Google, where she was an assistant treasurer. Karin also served as a managing director and head of macroeconomic policy at Bank of America and vice president at the Federal Reserve Bank of New York during the financial crisis. Karin holds a doctorate in economics from Oxford University, a master's in public policy from the Harvard Kennedy School, and an undergraduate degree in economics from Stanford. In 2017, Karin was recognized by Black Enterprise as one of the most powerful Black women in business. She is a member of the Fannie Mae Board of Directors and the Chicago Fed's Academic Advisory Council. This session will be moderated by Shuo Chen, who is a general partner at IOVC, a lecturer at UC Berkeley, and a faculty member at Singularity University. Now, Shuo, you have the floor.
Thank you very much, Harriet. Hi, everyone. Thank you so much for joining us on a Wednesday evening. It is such an honor to have with us today Karin, who is the chief economist at LinkedIn. Karin, thank you so much for making the time and welcome.
Thanks for having me, and good evening, everyone.
Absolutely. With Harriet's introduction, wow, what an amazing journey from starting your career at the Federal Reserve to where you are now. We would love to learn a little bit more about your story beyond, just the titles. How did everything come together?
Yeah, absolutely. And, thanks for your interest. Who doesn't love to talk about themselves? But I will say, in terms of the journey, it wasn't linear. And I have been known to say this, it wasn't that it was all planned out from soup to nuts or A to Z. It definitely was a little mix of the random, the unexpected, and changes in preferences. So in my case, I did start out very passionate about economics, but was thinking I would go and work at the World Bank or the IMF. And at some point, my interests kind of shifted. And during my PhD, I did a lot more econometric modeling. And when I finished, I ended up working for a bank on Wall Street, or actually in London. And then from there, some personal issues around having kids led me to think I wanted a different pace from Wall Street. And I went to work at the Fed, where I thought it was family friendly and I would be policy focused, and wouldn't that be interesting, and working the markets group. And then suddenly the crisis hit, and it wasn't at all family friendly to work at the Fed during the crisis of 2007, 2008, 2009. It was like every weekend a bank failed. So that was unexpected, but it was phenomenal. It was a front seat to a financial crisis I would have otherwise never fully, I think, understood. So a lot of the twists and turns were, honestly unexpected. And I guess what I usually try to tell people who are students now is, as much as I worried about what my path would be when I was in your shoes at that stage, I could never have planned it. And yet it worked out just fine. I am flattered, but I don't think I'm extraordinary. And there are many, many smart people who do many great things in different ways. So I would just say, pick what works for you where you are, and then know that, like, my process, as I said, was not at all planned, but every step has been very accretive, very additive to how I see who I am now professionally. But I could have never planned it.
I think that's really great perspective for students to know that, careers aren't linear and there's a lot of unexpected turns and twists. Would actually be really amazing to talk a little bit more about your experiences at the Federal Reserve from 07 to 09, because a lot of people are comparing what's happening to the economy now in the midst of the pandemic to what's happening back then. So what was your experience like?
Oh, part of it was, in retrospect, part of it was pretty hilarious. And I can tell you why in a second. Part of it was like so tragic and frustrating, and not because of the Fed, but just because you're watching this really horrible thing unfold and you can't stop it. So here's an example of what it was like. It was like watching a train wreck in slow motion. There were many ways in which we started at the Fed to see that things were not in equilibrium, let's put it that way, and that things were overextended and banks weren't quite in the right spot in terms of liquidity. And yet we couldn't, for example, convince the banks that they should come to us and take liquidity. And I distinctly remember Lehman Brothers at one point not wanting to come to the Fed's windows to borrow and use liquidity. And it was my job to record it and, relay it up to the senior folks. And I said, I don't know why, but, Lehman doesn't want to take any more money. This was August. And by September, they were over. And they didn't want to take the money because of the stigma of looking weak. But if they didn't take the money, they were going to be even weaker, and they failed. So it was like watching a lot of really painful slow motion train wrecks. It was also watching, in that case, a human toll that you knew was coming. You could see the credit crisis coming, and we knew it was going to hit the real economy. It was sort of hitting the financial markets first, but it was going to have a real toll on jobs and houses and people's, whole livelihood. And we just saw it coming, and it played out over a really long period of time. So it was painful and protracted. And this, 2020 pandemic was the complete opposite. It was so fast. It was like watching all the jobs that we lost in the last crisis, disappear in a month to a month and a half. And it didn't affect the housing market at all. Housing is stronger than ever. So it was really, really different in terms of how it played out in terms of speed. I think the depth of it was in some ways kind of worse this time around, because it had this extra health toll and people felt so scared. So I do feel almost way this was worse, but I think it's wrong to compare tragedies. Everybody's suffering is equally valid, and both of them were terrible. I think what's interesting about being at the Fed, and this is the last thing I'll say because I'm sure you want to ask me the questions, but it was a really interesting place because it was a bunch of really smart people, all of whom probably could go somewhere else and earn a lot more money on Wall Street, and yet they chose to work at the New York Fed and not earn that much money. I was one of them. And we were really convinced that we were trying to do our best. Like, it was sort of a common sense of mission across all of the Federal Reserve and all the banks of like, we need to meet the goals of the Fed of, whatever, stable prices and full employment, but also financial stability, and how do we do it? So everybody had this common mission or purpose. We didn't agree on how to get there. So there were endless conversations, which is the hilarious part about, is this a liquidity crisis or is it a solvency crisis? Like, who cares? It's a crisis. But we agonized over some distinction that, was frankly irrelevant at the time. We agonized over, should we do QE2 and QE3, and should there be more QE? And, I think in retrospect, it was right to just keep going, but we agonized, maybe we shouldn't. What about moral hazard? So there was a lot of like self-questioning, because in the moment, and here's the message, maybe in the moment, nobody quite knew how to articulate what's happening. We knew it was bad. We knew it was sort of, was like kind of a dust cloud getting bigger and bigger and affecting more and more people. But we couldn't have told you exactly how everything connected and why. And it was that the thing that I learned there was, one, when you're faced with uncertainty, you just need to keep going. And as an economist, my tendency is to stop, collect more data, and wait before I make a misstep. But in that case, you need to kind of keep going. Yes, we're going to do QE2, QE3, and so forth. We're going to keep buying bonds as much as it takes. Like, being bold in uncertainty was essential. And the other thing that I would say I learned there is just how much it's important that when you're on a team trying to figure something out, you all kind of have the same level of trust. Like, I trusted the people I worked with, and we were all trying to solve the same problem. We might have disagreed, but we were all working towards the same point. And I think that led to more success as a team. And I'm saying this kind of across all the Fed. I really do think there were people who were trying to do their best, and history will judge us whether we did or didn't. But it was a very common sense of like, we have to restore financial stability. And I think there were some things we missed, by the way, some really big things. But there was a common sense of trying to do the right thing. That was super powerful.
Thank you so much for sharing, because especially looking back at the crisis now, it's really hard to get firsthand information for someone who actually saw it right there and unfold. I think now there's more focus on the Federal Reserve more than ever before, in knowing that the decisions they make are going to impact markets all around the world, on jobs and on everything. but you having seen it once before, is there a different perspective that you would approach, 2020 and 2021 with now?
Well, I do think the Fed, if you look at what now Treasury Secretary Yellen, who used to be at the Fed, is doing, I think she's, and by the way, I think she's amazing. She has been very committed, and I think as the current Fed chair, Powell, is very committed to not kind of pulling away the punch bowl too early, as they like to say, not starting to tighten the economy before we're really sure we're through this. I think the other thing that's been learned is that, and we knew this, but I think it's really became very stark, is that you can kind of restore health to the financial markets, but it doesn't mean you've restored health to like the real economy, people, their jobs. And it took a very long time after the 2008, 2009 crisis for employment rates for various groups of underskilled people, Black and brown people, to really recover. It took years and years. And I think now what's happening is there's a focus on, let's make sure that a lot of people can enjoy the next recovery. Let's not, too early call time and say, okay, it's time to start raising rates before there's a chance to pull more people into employment. And especially now we had such a big event last year of, some 22, 23 million people, at least on paper, losing their jobs. It was probably more than that. It was probably closer to 28 million or 30. How do we back working? So I think they're going to leave the spigot on, keep things very liquid for quite some time until they're really gotten rid of sure they
a little bit perspective, given that your career has spanned Wall Street to the Federal Reserve to Google, and now LinkedIn, you've really gone across public and private sector divides from traditional financial institutions to technology companies. What is that like? And what are the differences or things that people should think about as they're considering different career choices ahead?
That is a great question, because there are a lot of them. I don't think I could, I should write a book. There's so many of them.
You should.
Yeah, and I'll just pat myself on the back on the book you want to read. But I'll tell you this. It's a great question. A couple of things that are really different is, there's the obvious ones of depending on where you work, your compensation might be different or your schedule might be different. These are things that we all think about. And by the way, they matter. They very much matter if you graduate with student debt, or they very much matter if you are a working parent and you're like, I need a job that gives me flexibility. So these things all matter. But what was different between, say, banks and tech companies and the Fed? There were very different populations. For example, the Fed, surprisingly, the New York Fed, by the way, but all of the Fed, we sat on Wall Street. We were like a block away from Wall Street, and we had a huge number of really smart, phenomenal women who were either trained in finance or economics or mathematics. And they often worked at the Fed because it gave a lot of flexibility that Wall Street at the time, this is a while back, didn't. And so you could go to the Fed and find a ton of really impressive women that you wouldn't have seen on Wall Street. It would have felt more like a guys club at Wall Street back then. I think that's changing now. One of the things that's really different, so flexibility does matter. It can kind of drive the gender divide a little bit. The other thing that matters a lot is who's your client, so to speak. So here's a very unfair, you're going to quote me because I'm sitting here on a recorded line, but this is a totally unfair kind of analogy. But if you were at a bank, you know very clearly who your client is. You know very clearly how you're going to be evaluated by the end of the year in terms of, did you get a deal done? Did your trades make money? And so it's super clear what's happening. Did the clients like you or not? If you were at the Fed, that is not your client. Your client is policymakers. Are you a clear communicator? Do you have a rigorous approach to your thinking? Are you collaborative and inclusive in different policy ideas? So you're being evaluated on very different measures for success. And if you are in a tech company, obviously you will have external clients, but you're also often oriented around the product division, which is kind of like the golden child. So a lot of people want to be tied to product because that is, the heart of most tech companies. So excuse me, everywhere you work, the incentives are going to be a little different in terms of how you're rewarded and how you're evaluated. And they require different skills. So here's the last little bit of that answer is that in some cases, it's more important to be a great storyteller. In some cases, it's more important to be published in journals. And in some cases, it's more important to be able to talk to across disciplines to engineers and statisticians and be able to like translate different concepts from one domain to another. So all of them, by the way, are equally hard and need to be figured out, but it was very, very different environments in terms of how the incentives for success were structured.
I think that's a great way of looking at, especially for students or even young professionals now who have only really been in one industry or just within the public versus private sector. It's really hard to get a comprehensive overview. So I think that was great.
Well, I would encourage, I'm sorry, I'm jumping in again, Shuo, but I would just encourage you to be brave about exploring. And I didn't spend nearly enough time exploring, even nonprofits but the skills that all of you have are going to be sought after in every single domain, from like urban planning to, the product design and tech companies. And, you guys should have fun with it. The skills you have are going to be in demand everywhere. You can go anywhere. You have like a passport, I think, to many, many domains. Sorry, go ahead, go back, Shuo. It's back to you.
No, that was perfect. And actually on that, I did want to ask any advice that you would give to students, either that you wish you had known back in the days, or
maybe even solve it. Wow. So if you're in your first job, backing up to your question, if you're in your first job and you're trying to think about what you want to get out of it, see if you can get some just challenge, get yourself to get challenged to solve problems. They may not be the intractable, impossible ones, but start building that toolkit of how do you problem solve. whatever tools you're equipped to use. And that will carry you so far. So that would be my advice, is focus on that.
I think that is super important. And one thing about the times that we're currently sitting in that's a little bit different than before is that it's really hard to explore and build relationships with people now that everything is virtual. And I know that students and professionals more than ever are leveraging LinkedIn as a tool to develop new relationships. And anything that you would advise there in terms of leveraging different tools, including LinkedIn, to help them explore?
Yeah, well, you know what's really interesting that we're seeing on LinkedIn is, first of all, it's really cool to work at LinkedIn. I'm going to tell you that. I'm not trying to sell any of you. I'm just saying, like, it's really fun. The data's really cool because it's like looking at the human, the human condition, human behavior. And one of the things that we're seeing, among many other things, is that the way people reach out now is different than it was pre-pandemic. So now that we're all remote, trapped in our own little home, you see my background, I pretend I'm in the woods, although I'm not. I'm in a little office at home, but the way you see the world when you're trapped at your desk in front of your laptop kind of lets you be a little bolder about reaching out to people you don't know. So we're seeing the barrier actually drop in terms of people reaching out to folks they don't know or don't necessarily have a connection with, to say, hey, this is me, so and so, virtually reaching out to you. And that's kind of exciting. So people are reaching out to people that are further away from them, geographically distanced, further away from them in terms of, maybe if you think about networks, the more dimensions out in terms of either industry or job level. So the barrier seems to have come down a little bit in terms of people reaching out. And I think that's exciting. I think obviously you want to be judicious about it. And the advice I often give people, and I'm sure all of you guys know this, but I'll just give it anyway, is like, you should always imagine that the person you're talking to is very, 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 very busy. So if you want something, tell them what you want. The worst is to get some kind of general outreach and the person doesn't quite tell you what they want, and you don't have a lot of time. You're trying to be polite, but you're like, what is it that I can help you with? Because I'll either say yes or no, but just get to it. So obviously you want to be polite, but I would say be direct. But we're seeing a lot more people reaching out to make connections. And it's okay to say, hey, I'm really interested in this. Do you know of anyone I can maybe talk to for an exploratory conversation? Or, hey, I'm looking for a role that will allow me to learn X or do Y. Is there anything available in your organization that I could be considered for? It's totally fine to just ask for what you want, as long as you recognize that the person might say no and they have a right to say no. But definitely, whatever you do, don't drag it out. Keep it short and snappy.
I think that's super actionable advice. And actually, on that note, would love to ask you a little bit more about the other interesting, fun, and exciting things that you see in your role. So I guess two parts of this question. First of all, what does it mean to be chief economist at LinkedIn? And in that role, the second part, what are the fun things or insightful trends that you see that otherwise outside of this role you might not be able to see?
Sure. So to be a chief economist at LinkedIn means, one, getting to play with this treasure trove of data that spans 700 million plus members globally. And we have a way to look at how people, progress through their professional career. So it means trying to tell and extract insights that would be meaningful, either because it showcases what LinkedIn is seeing. And by the way, you think, okay, so who cares? But actually policymakers are deeply interested in trying to understand what are possible opportunities for their jurisdiction. So you imagine you are the Minister of Education or the Minister of Technology. You want to very much understand what skills your population has, what skills employers are looking for. Is there a gap between the two? Because that might tell you where you need to do training or try to find companies that are willing to sponsor targeted skilling programs to just bridge that one skill gap or two skill gaps that would mean your population goes from being kind of quasi-employable or at an average level to being, much more advanced. So policymakers are always looking for data that's real time that we have. It's fairly granular, although we always anonymize it and we ensure that members' privacy is protected. But they're very interested in knowing what's going on in their region. There's also a lot of stories just to surface. So I'm getting a little bit away from what a chief economist does. So let me back up. Chief economist, tries to extract those insights and tell those stories. Sometimes those stories are useful to policymakers. Sometimes they're useful to customers of ours. Sometimes they're useful internally to think about how can we make the product better. Who are we not serving or over serving, and things like that. So my job is to kind of extract those insights. But what I wanted to answer in your second question, Shuo, was you asked a little bit like what we're seeing. And so a good example of that was back in, I think it was late March, early April of last year, we saw that women suddenly weren't noting that they were getting hired at the same rate as men. And I was like, huh. And then I saw that it wasn't just the US, it dropped like 4 percentage points, within a couple of weeks. So in the past, women were getting hired at a certain rate and men were getting hired at the rest of it, 1 minus X. And then suddenly women were just being hired at a 4 percentage point lower rate. And I just couldn't work it out. And it wasn't just the US, and then it was global. So I'm like, okay, if it's global, it's our data. There's something with our data. And I made everyone go back and like recalculate everything and check everything. And it wasn't our data. It was a global phenomenon that women were suddenly not only not being hired for roles, but they were not even applying for roles. And what does this all mean? Well, maybe it's because little people are no longer in school, or women are suddenly juggling and don't have time to kind of go after that next opportunity. And they're kind of like, maybe I should stay with where the job I know, the boss I know, rather than trying to go for a new job in the middle of a pandemic. So whatever the reason was, women stepped back from the labor market. I don't think it was a discrimination thing. I think it was just women had often an extra burden. And we saw it particularly in certain generational slices. So we could say millennial women, in the next generation up, Gen X women, who are more likely to have kids of maybe school age, but not yet independent. So you need to kind of stick around, make sure they're eating lunch or they have lunch, or that they're on their Zoom class. And so we saw a lot of women kind of step back from career progression. And it did recover eventually, but it meant everybody, it's sort of like we paused women globally for a bit, and that's not fair. And so I was trying to articulate a story and say, there is an unperceived burden that has been shifted to women as a result of the lockdowns. Now, it might be the right thing that we have these lockdowns, but let us not undercount that burden and presume that, we're all sharing it equally. It is falling disproportionately on women, and we see it. And so that was a story, for example, I was trying to highlight, and I started highlighting it, I think, in May of last year. So that's, wow. I think, an example of something we saw. I could tell you lots of things we saw. If you want me to go on, I can, but that was just one example for women that we saw in our data. We saw a lot about migration, people moving out of big cities. So.
What an unintended consequence of the pandemic. I was actually about to ask you about that specifically, because the latest economic data that came out in December, I think, said that out of the US, out of the 140,000 jobs that were lost, it was completely 100% driven by women, whereas men actually gained employment. So it seems like there's still that trend that is going on. And I don't know if there's anything that, for example, everyone on the call now can practically do, or if there is anything that we can do about that at all.
Yeah, so we've been watching this, and I mean, December was a bad headline. There's no, I can't, put a nice spin on it. There were 140,000 jobs lost, and on net, women lost 156,000 jobs, and on net, men gained, I forget how many, but they on net gained. So, inflows and outflows, but women definitely lost many more jobs. Again, I don't think the story is any kind of discrimination against women, but what we find in our data, because we've spent a lot of time looking at gender issues and how COVID has affected gender breakouts of hiring for the countries that we can see. And to be honest, we don't see every country equally, right? It's wherever our members are, that's where we have a better lens. And what we saw was women are clustered for lots of reasons that we should explore in certain industries and sectors, and those are the ones that have been COVID hit. So retail typically is overrepresented by women's employment, travel and tourism by women, entertainment. A lot of these jobs are flexible jobs again. So it's back to like, why do women need more flexibility than men? Maybe we should just give everyone flexibility. But something's causing women to cluster in roles and then, or sector, excuse me. And then when they're in that sector and that sector gets wiped out, and that's what happened in December, there were like 500,000 jobs lost in like leisure and tourism and entertainment and restaurants from the shutdowns in America. That just set women back. So you could say, okay, women were unlucky. And in the prior recession of 2008, it was one where men were more, felt it more acutely. But I don't think we should think of it like men versus women in terms of who won this round or that round, but I'd rather say, why are women clustered in certain sectors? When if we think that talent is evenly distributed across, you know, all genders, all races, all religions, all countries, I do believe there's geniuses everywhere to be found. Why are women clustered in particular industries? What's driving that from a social policy question? And then when that industry gets hit, it's going to disproportionately hit women. And by the way, it's what we've seen, just to double click on that show, is we definitely saw anybody who was underskilled has been hit worse. So if you're not able to work remotely, if you don't have advanced digital skills, or you're not more senior, you really got hit harder. Unfortunately, race is a huge proxy for that. So Black and Hispanic women got triply hit by that. And in the most recent data, I think what we're seeing is that Black women and Hispanic women are still kind of seeing higher levels of unemployment than white women are. And so I feel like there's a lot to unpack there. I didn't mean to lay all that on you, but yeah, it's been a really interesting question. And I think underlying that is just that women are clustered in certain sectors, and those sectors got completely hit. And I think we should ask ourselves, what drives that? And one of the things we're looking at, by the way, for this audience, is we spend a lot of time looking at where AI talent is. And we can see that, you know, in Europe, for example, you know, certain countries have more evenly balanced. In Europe, it's like 90% men, 10% women. And so the question is, what's driving that distinction, you know, between like say, German women and French women? Why, you know, some more represented than others? And it's probably down to social policies. I don't think it's anything else.
And thank you for unpacking that for us. The reason why I think it's important to ask that question is because as whether it's students or young professionals are looking at different career choices or even career paths, like different industries that they can be in, it's really important to think about a lot of these different elements, right? Like if there is relatively less representation in a certain industry, that doesn't necessarily have to discourage you from wanting to pursue a career in that. But that's also the fascinating part about your role, because you get to sit at the middle of not just data, but also technology and economics and also policy. So being able to leverage data to tell these stories is so fascinating. And you were also starting to talk about migration and other interesting trends. I'd love to learn more about that.
Sure, I can tell you a couple things. So couple things we're observing. One, let me tell you one story about company size. So I think we kind of anticipated this, but we're seeing a lot more clustering of employment with larger employers, maybe because they're more resilient. A lot of times they're more easily tagged as essential for whatever reason than smaller companies. And so what's interesting is you're seeing kind of labor sort of, I would say slowly, diffusely getting moved towards larger employers, which I think is a shame. So we're kind of looking at it from like a Herfindahl, you know, approach of like, what's the concentration of labor and how is it distributed? I would have predicted that, and that's what we're seeing. In terms of migration, We definitely saw people leave New York and San Francisco. And I kept trying to be like, maybe it's just a 1 month thing. But I was like, no, they're leaving. And we saw a lot of people leave a lot of big cities. But a lot of people left tech cities. So this is where we got interesting, because we had a lot of people leave cities, but they didn't leave all cities. They weren't leaving Houston and Dallas. They were leaving Boston, New York, Seattle to some degree, definitely San Francisco. They weren't necessarily leaving LA, so it sort of depended. And what I worked out was like, it's a lot of tech people who are allowed to work remotely, because the incidence of permission to work remotely is much higher in the tech sector. So those are the people who could leave and still kind of command the same salary and all the benefits, and yet go sit someplace cheaper or safer. And so we saw a lot of people leave, tech people leave cities that had high rates of tech employment. We did see people move to other large cities, but we saw a lot of second cities benefit, which I think is an interesting trend. So a lot of people didn't move from, say, New York to Chicago. They moved from New York to, Charlotte, or even smaller towns, Raleigh, Austin, obviously, a lot of Texas, a lot of Florida. So a lot of this unclicking of who moved was tech workers. A lot of unclicking was, where did they go? They went to second cities. And a lot of unclicking was people went to states in the US that had more favorable tax rates. So they moved to states that had no income tax, which might have been a reaction to some of the policies that have happened recently in the past couple of years. Mm-hmm. So it's been really interesting. I don't think I can tell the end of the story yet. I think when I'm just watching it chapter by chapter, I personally believe the big cities are going to come back. I think it's just on pause. And I think until big cities open their schools again, and, it'll be too early to say what happens. But I think in the interim, what you're seeing is people leaving. They don't have to be there anyway to educate their kids, because their kids are all on Zoom school. And they're also finding, here's the underlying thing, the generational thing is the biggest generation right now, as you probably know, are millennials. And a lot of them are late 20s, early 30s, in that sort of form a household point, maybe start to think about kids and space and what I can afford. And the cities have just gotten really bid up. So I think people are starting to say, well, maybe I'll go find a house in New Orleans or something, and start over. So there's a lot of trends to watch, and it's really hard to know which one is driving it. So I have to tell you with all humility, I don't know how the story ends. I'm still trying to figure it out.
I think at least fascinating lessons we can learn from this is that I think the first point that we were talking about, that I think everyone in the audience can think more thoughtfully about different ways to kind of tackle this issue, whether it's developing your own skills, particularly, for example, in AI, as you were talking about, preparing themselves, investing in themselves, or being more supportive of colleagues who are women in terms of understanding their home kind of engagements and other things that they have going on, or even things like if they're in the process of thinking about building a startup, something that might kind of help equalize different pressures. But also on the second point that we were talking about this geographic migration, that students can be more encouraged to reach out to jobs in different cities that they might not have considered, because there is that opportunity to work remotely, or continue to be engaged in kind of these major cities, even though they're physically not here. So hopefully that at least opens up the thinking process for people to think about, what does that mean for me? What does that mean for the company I want to be a part of, or the company that I want to build? So thank you for sharing that.
My pleasure.
I also wanted to ask a little bit in terms of opportunities. So we talked a lot about specific data trends and what's happened in the past. Looking ahead into the future, where do you see the most opportunities being in terms of jobs, career paths, anything from the data that you have?
Yeah, I mean, you guys are not going to be surprised, so you might be delighted. When we look at like over a longer horizon, and by the way, LinkedIn's not that old of a company, but if we go back and say, okay, what can our data show us are the most sought after sectors. And by the way, of course, LinkedIn has its own skew bias, right? Like, so we do have a lot of white collar professionals, but where we see the most demand for talent is in AI, data science, cloud, surprise. This is where it seems to be just a continuous, unrelenting demand for talent that can work in those domains. Those are sort of the underpinnings, like the long haul trend that I think won't go away for 5 years, 10 years, is that demand for those kinds of skills, engineering, software. There is a different kind of lens that we also take, which was, where is the demand kind of since COVID? It's a little different. And because I restrict it to since COVID, I'm obviously going to get a different answer. So I still get all the AI, I still get all the cloud and data science, and anybody who can do like project management, program management, all those things are always in demand. But what I also get is a lot of reflection of what our economy is going through, which is this huge acceleration towards the virtual, towards the online, that we're all seeing and hearing about, because we're all shopping online. We are we're now consuming services online, whether it's like the movies we once went to, we now watch more on Netflix and Amazon Prime. It could be that we are exercising online with online classes. So everything we're doing is kind of online. We're collaborating and working together online using all those tools. So what you're seeing is an enormous increase since COVID in demands for people who have like experience in anything on user experience, digital content, digital engineers. So if you can create content, organize a web page, I may not even use the right terms because it's not my core expertise, but the jobs we see, like web developer, game developer, anything that is content creating online is in huge demand. We're also seeing anything related to e-commerce. So some of these jobs are very basic, like they need many at the moment, many more drivers to deliver all the packages from Amazon. I'm just, as an example. Or you need many more people doing inventory management at these big distributional warehouses for the e-commerce. You also need more personal shoppers. So it's like a big gamut of skills, between the highly digitally advanced skills to like, I need more personal shoppers because people don't want to go to the store. And then we're also seeing, just as a more like current reflection, this is probably not for any of you here, but a current reflection of the times of a very strong housing market. Pandemic is a huge increase in demand for healthcare workers of all levels, everything from home health aides who are relatively low skilled to people who are more advanced skilled at hospitals and can do data management. Again, back to the data. So it's e-commerce, the healthcare, anything to do with digital content. All of that's hugely in demand. And what does that tell me? I'm going to wrap it all up in a nice bow for you. Whether you're looking near term about what I'm telling you, like what's grown in the last, say, 8 to 10 months, or you're looking long term, what are the fastest growing jobs in the last 5 years? What I'm seeing is sort of a digital element across all sectors. So it doesn't matter if your passion is health or the labor market, or your passion is gaming, or your passion is sports and recreation. There is a job out there that needs some advanced digital skills, because everything has been permeated by that. Which brings us back to the AI, the cloud, the data architecture, data management, and data scientists. All of these things are hugely in demand and unlikely to go away anytime soon. So I don't know if I answered your question. I felt like I gave a really long answer, but the future is digital, as we all know.
I think that is really helpful to know, because I think obviously for students, regardless of what major they're in, at least they can hopefully be encouraged to take a class that they previously hadn't considered before, whether you're studying public policy, or if you're studying, traditional bio or chemistry. it might interest you to take a data related class or to take something, vice versa as well, to become interested in a different industry. How about professional?
Yeah, can I jump in for a second and just add to that, just in case I
Yeah.
scared away people who aren't technology, consider themselves super technology adept. There's an element of like, there are lots of tech companies that are, off in search of more engineers and all that. And then there's a lot of companies that aren't technology companies, but need a little help with people who have those engineering skills again. And then flip all that on its head and say there are a lot of companies and maybe a tech company, but they need a finance person, they need a marketing person, they need an HR person. They may be a tech company with a bunch of engineers, but they still need all those other human functions. so it's just the intersection. For every company is going to need a mix of the digitally advanced and also the human. And what I try to tell people, not to freak them out, is like, you're going to be somewhere in that spectrum between, hardcore cloud engineer to poet. I don't know if that's the other end of it, but the more you can kind of mix whatever your human skill is, your creativity, your communication, your empathy, all those human things that I value so much, with at least an understanding of technology, that's what people want. Because eventually the robots are going to do a lot, but they're still going to need a human to kind of be like, does this make sense? Is this ethically correct? Is this compassionate? So mixing the two, if you can do both, it's a sweet spot. Sorry, back to you, Shuo.
No, that was perfect. I think that's great advice, because I think hopefully that encourages any students in the audience to become more multidisciplinary, to get exposure to something, that they previously hadn't considered.
Yeah, there's a lot of examples of how, there's a lot of examples of where even skills that are not particularly digital, like working in a warehouse as an inventory manager, you may now have a handheld device that lets you, scan what boxes are on what shelf and where and how many are moving or sitting. And that person may not have ever, done a 4-year degree in college, but they need to basically use and understand the technology. And so there's a lot of range for technology to get infused into any role at any level. Okay, back to you.
And hopefully, on the back of what you said, that will also present a lot of opportunities for entrepreneurs, right? As they're seeking for providing more digitally savvy or mobile native or different types of solutions. So I think it sounds like at least there's boundless opportunities ahead, and people don't need to be too worried about the impact of the pandemic, being severe and long.
Worried. Well, we're going to get through this.
Yeah.
I totally agree.
What about for professionals? I think that is great for students who are currently in school and have the flexibility of time to take different classes. What about folks who have been working for a few years and starting to think about what they can do outside of their daily jobs to invest in themselves and build more skills?
Yeah, that's a great question. And by the way, it's harder to answer because it's just true that as you work more, your skills, as you get further out of school, your skills are kind of depreciating a little. They're new techniques, and so you do have to like invest more in yourself. And in the olden days, companies did a lot more to reskill their employers, and that lately hasn't been the case. They'll just sort of hire younger folks with the latest skills. So if you are a more experienced, worker, you kind of have to do it on your own. The good news is there's lots of online options. LinkedIn obviously is happy to, let you peruse their library of options. But there's also this huge revolution happening in the education sector, by the way, which we never talked about, but I think it's fascinating, where education has got to catch up to the pandemic's demands and start to move online, and maybe not have this, what you call 2-tier system of like some advanced IVs and then, other, online courses are somehow seen as like second or third tier. I don't think so. My husband right now is taking an online class at Columbia, which is his alma mater, but he wanted to go back and learn something. So he's taking an online class at Columbia University's Business School. So I think, we're kind of waiting for education to catch up fully, but I think they owe it to us to create those opportunities. I think a lot of companies are investing more in what we call L&D, learning and development of their workers. And I think workers ought to demand it. I mean, I'm not trying to create a revolution, but I think they ought to demand that companies invest in them to keep their skills current or advance them. And I think it's good for the company. And honestly, they can afford it. Most companies can. Bigger companies can definitely afford it. So long story short, right now the burden is still kind of on the individual, but I'm hoping 5 years from now we look and we see that companies have sort of taken that upon, that sort of reskilling revolution, and recognize their role in it. And I also hope that educational institutions are stepping up as well to kind of create more of a spectrum of learning. Our system in America is very much set up like you learn until you're 20, whatever, and then you're done. Which is crazy. You should be a lifelong learner. You should be going back and refreshing and expanding and adding. And it's not quite set up for that just yet. That's the next disruption I think that's happening.
I think that's super on point, even for folks who are working now, that since things are remote, they have the option of more easily, say, taking a class back at their alma mater for a lot easier than if they had to attend class in person. So there's always going back to school or taking online courses, and or even reaching out to your own company and more, I guess, demanding more content or support for reskilling and improving yourself. And hopefully showcasing that that's going to make you more effective as an employee as well. So I have one last question for you before I open up for a quick Q&A, and then pull folks who have been selected for the roundtable into a separate breakout room. So if anyone has any questions, please do send in the chat while I ask this last question. So really the last question I ask is just hoping to leave everyone with an image of, what's coming next in the next year or two, as you look ahead in your role across, technology and public policy, and economics and data. What are some of the human ways to kind of string all of these different pieces together, things that they can be thinking about as they choose their careers ahead?
Yeah. So I mean, maybe the overarching tagline is lifelong learning. So that continuous skilling and learning, and to the extent that people can help others find a way to do that, making things accessible. I think that's where technology is best, is when we are able to kind of increase people's understanding of the range of options, increase their access, increase the accessibility to things. That's the best of technology, right? I mean, what did we do before Wikipedia? And what did we do before cell phones? Like, things are much more accessible now because of that. So that to me is like the North Star. It's that sort of creating more opportunity for people. And if you're working towards those kinds of things, I think you're on the side of right. I think you'll get rewarded for it. Maybe a little bit more concretely to your question, I would also add, I think, in addition to this sort of educational disruption that's happening this moment, I think we're also hopefully moving towards a place where people can be looking for roles on the basis of the skill they have and not on the degree they have. No offense to anybody who's getting a really amazing degree. I'm also someone who was a professional student and got lots of degrees, but to hire people based on the skills they have, or can demonstrate, or certifications they get, as opposed to just they went to this school and they got this degree, I think would be a way of expanding access and opportunity to a broader set of people. So maybe you didn't get to go to school because you couldn't afford it, or you didn't get into school of your choice, or it was too far away, or you had family issues that prevented it. But if you found a way to train yourself to get that skill, why shouldn't you have an equal shot at the job? And so from a hiring perspective, with my LinkedIn hat back on my head, I would say I think we're moving towards skills-based hiring as opposed to pure degree-based hiring. There'll be a role for both, but I would like to see both, not just degrees.
Thank you so much. I think that's a perfect note to wrap this up on. I have had a bunch of DMs as well as people sending messages in the group of questions. So maybe I'll choose 2 to 3 quick questions to ask you before I pull folks who apply to the roundtable so they can directly turn on camera and audio and ask you those questions directly themselves. So one of the questions is someone's working on a product through virtual coaching. And he is or she is wondering, what are some of the most important skills in your career and gaps in helping people develop those necessary skills? And what role can technology play?
So this is like with coaching, is that what you're, yeah. That's a great question. Go ahead, Shuo.
More related to like EQ and at least from what I'm reading here.
Yeah. I don't know if I have the right answer, but I'll tell you what I think. I think when it comes to coaching, whether it's in person or online, a lot of it is letting the person articulate, the one who's being coached, letting them articulate the uncertainties or the anxieties or articulate the problem they're trying to figure out or navigate. And sometimes coaching is just about getting them to kind of tease out what the block is on their side. They often kind of know what they would give great advice if they weren't in that position. So it's just kind of getting them to step out of their problem a little bit and talk about it. I am not actually coaching anybody right now, but I'm mentoring a few people. And what I find is that even just being empathetic and kind of sharing a story that is similar, it may not be exactly, gives people a sense that like, this isn't the only time this has ever happened. Like there's a way out, like giving them the sense of the possible to navigate a problem or to move forward. I think can often be inspiring. It's kind of like if you see it, you can be it. And so if you can see that someone else made it through that problem, you can kind of say, well, I should too. I'll find a way. I just need to figure it out. So I would say some of it's empathy and listening, and some of it is probably, sharing your own perspective. I don't know if that was very insightful. Sorry to the questioner.
Oh, that was good. So I'll ask two last questions and then we'll start the roundtable. This person's asking, what are your thoughts on the progress and protection of contractors now and in the near future? Not sure if LinkedIn has data on that.
You know what, to my knowledge, we don't have data on that from members, but it was one of the most interesting things that I learned about when I moved from, I'll just say from the East Coast to the West Coast, from like banking to tech. I was like, there's a whole different population of workers. Now there were contract workers at banks as well, but it was a very segmented workplace in a lot of tech companies. And my thoughts are probably not fully evolved, but what I would say is it's probably advantageous for the employer, but not the workers, to be segmented like that. And separate is usually not equal. So these are probably obvious thoughts. My thinking is that is a very smart way for companies to organize themselves, but it's not great for the worker. And I don't think it's going to last in the long term. Mm-hmm. I think 10 years from now, it won't look that way. But it's a great question.
Yeah, it is. I have a bunch of other questions that are asked. I'm afraid I won't be able to get to all of them, but I will ask you one last question. I'll kind of combine two questions into one. So from the data that you see, do you see any shift towards green jobs or jobs that are supporting the environment? And the last one that I see here is, how do you see role of mentors evolving in the future across geographic boundaries? So I guess from back-end data, I don't know if there's anything you can see on mentors, but on industries as well as geographies.
Okay, so I think I heard two questions, right? And I'll be quick. One is green jobs and one was mentoring across region?
Geographies, yes.
Geographies. Okay, so green jobs, we are looking at it right now. Stay tuned. I'm super excited. We made a big bet last year that we should start looking at the green economy and green jobs and skills. And we're super excited. We've created like a taxonomy of it. And I'm incredibly proud of my team for it. But what I will say is we are definitely seeing it in the green. It's really interesting because it's like, what is a green job? Is it a green job if you're an accountant for Tesla? Is it a green job? If do you know what I mean? Like maybe it's sort of greenish, but is it green? So it's not so easy, but we're definitely seeing green job hiring at a faster pace than let's call it regular job hiring. So there's a demand there. I think it's only going to continue. And in some countries, green jobs look like ecotourism, and in some countries, green jobs look like I'm building, electronic vehicle components. So it's a huge spectrum. That was one answer. I'll try to be quick. The second question was about mentoring across geographies, and I would just say, I don't see why not. I will tell you, and I think Shuo, you and I talked about this earlier, it's working by Zoom is not ideal. Like for me, it's really hard to be creative. It's really hard to do blue sky brainstorming with your team when you're all flat. We're all flat, one-dimensional. But I do think mentoring is possible. I do think it's possible to have a conversation. So I don't see why it wouldn't work, but I might be missing the nuance. But I think I'm all for it, and I think it can work.
Perfect. Thank you so much, Karin, for your time with us on the main stage. I have a bunch of other really good questions and also even feedback or thoughts on LinkedIn. So I will carry that to the roundtable, but definitely encourage those folks who actually thought about questions in advance for the roundtable to come join us in the breakout room. I think the organizers are going to pull us as well as the ones who are selected for the roundtable into a separate breakout room now. Thank you so much, everyone, for joining us.
Thank you so much, everyone.
I believe, there we go. That's
right.
it.
Yes. So this marks the end of tonight's fireside chat. So thank you all for coming, and we certainly hope you enjoyed the session. So could you guys please change your username or the name for your thing to your full name, just so the host of the meeting can pull those who are in the table to the different. Right. Great. Okay. So we will also be uploading the recording on our YouTube for today's session. And on our YouTube channel, you can also see the recording from our previous session, as well as recordings from our conference and everything. So I have sent our YouTube channel, the link to our YouTube channel in the chat. Great. Yes. Thank you. And hopefully you guys enjoyed the session and have huge takeaways. So we hope to see you again for our next speaker event on the 10th of February with Jamie McGurk, Managing Partner of Private Investments at Coatue and previous operating partner at Andersen Horowitz. So now for those of you who were selected to join our roundtable, please wait to receive your invitation. And please change your name to your full name if you haven't done so already, just so our host will be able to put you into the breakout room more easily. Great. Thank you for joining us today. And hope to see you again.